You are being taxed every single day, and the most shocking part is that you probably don't even realize it. This isn't a tax that comes with a notice from the government, a deduction on your paycheck, or a fee at the checkout counter. It is far more silent, far more subtle, and far more powerful than anything most people imagine. It works invisibly, gradually eroding the value of the money you earn, the savings you painstakingly build, and the financial security you hope to maintain. Every dollar you hold, every paycheck you receive, is slowly losing its purchasing power. You don't see it happening, and yet the effects are undeniable: rising prices, shrinking savings, and a future that feels increasingly uncertain. This is the hidden tax of inflation, quietly taking from everyone while few even notice. Inflation is far more than just prices going up. At its core, it is a powerful wealth extraction machine, a silent mechanism through which money gradually loses its value, transferring purchasing power from ordinary citizens to those who control the creation of money. For thousands of years, governments, monarchs, and financial elites have used this tool to fund wars, pay debts, and consolidate power, all without raising formal taxes or alerting the population. Its genius lies in subtlety. Entire societies can be taxed without ever being aware that it is happening. Unlike visible taxes that come with bills, notices, or deductions, inflation works invisibly, eroding savings, wages, and financial security in plain sight. In this video, I'm not here to give you a dry, technical lecture on economic theory. Instead, I will reveal the hidden mechanism, the manipulation, and the master plan behind inflation, showing how it has been deliberately used to redistribute wealth throughout history. By the end of these 10 minutes, you will never look at money, government policy, or your own savings the same way again. You will understand how this silent system works, who benefits, and why ordinary people have been paying this hidden cost for centuries. Let's begin with a truth that almost no one teaches in schools or explains in mainstream economics. Inflation is not random. It is not an accident, and it is certainly not an unavoidable part of the economy. Inflation is engineered, carefully orchestrated by governments, central banks, and financial institutions to serve specific purposes at the expense of ordinary citizens. Understanding how this hidden tax works is the first step in seeing the economy for what it really is. Here's the mechanism. You earn money through labor, exchanging hours of your life for a paycheck. But here's the catch: the value of that paycheck is constantly shrinking. Your bank account may show the same numbers month after month, but the purchasing power of that money is steadily declining. If your salary remains stagnant while groceries increase by 10%, your standard of living diminishes. If rent rises faster than your income, you are effectively paying the inflation tax. And if your savings earn 1% interest while inflation is 6%, the money you carefully set aside is silently losing value year after year. Inflation is essentially a transfer of wealth from those who work and save to those who control the creation of money. And the brilliance of this system is its invisibility. You don't get a bill, you don't sign a form, and you rarely even notice it happening. The tax is collected silently, steadily, and relentlessly through the invisible erosion of the money you already have. Inflation is older than modern democracy, older than the stock market, older than the financial system itself. Civilizations discovered inflation long before central banks existed. Ancient rulers realized they could fund wars or massive projects not by raising taxes, which angered people, but by debasing money. They mixed silver with cheaper metals. They kept the same royal face stamped on the front. They pretended nothing had changed. It was the earliest form of inflation, a hidden tax baked directly into the coin. Over time, people realized their coins were lighter, less valuable, and unable to buy the same goods as before. The government had taxed them without ever passing a law. Fast forward to the early modern world, when European governments were rapidly expanding their armies, building empires, and financing costly wars. Rather than burdening their citizens with higher taxes, which often sparked protests or rebellions, governments found a subtler, more insidious method. They began printing paper money. These notes were presented as being backed by gold, silver, or land, giving the appearance of real value and trustworthiness. However, each new round of money printing diluted the value of the existing currency. Suddenly, the money people had saved over years could buy far less than before. Bread prices skyrocketed, rents rose, and everyday goods became more expensive, quietly transferring wealth from the population to the state. Ordinary savers were particularly hard hit. Money that had been considered secure suddenly lost its purchasing power, eroding the financial security of families across Europe. Meanwhile, governments benefited enormously. By inflating the currency, they effectively reduced the real value of their debts, paying off loans with money that was worth less than when it was borrowed. Inflation became a repeated tool mechanism that could rescue governments in crisis while ordinary citizens bore the cost. This pattern was not an anomaly. It was a deliberate and recurring strategy, demonstrating that inflation has long been a powerful instrument. Today, governments no longer need to dilute silver coins or run printing presses around the clock to manipulate the value of money. Inflation has gone digital. Whenever governments spend more than they earn or central banks create new money, the value of existing money falls, silently eroding purchasing power. Your savings lose value, your salary buys less, and everyday expenses, rent, groceries, fuel, and housing steadily climb. Meanwhile, those who benefit most are the people closest to the source of this new money. Governments themselves, large banks, major corporations, and wealthy investors who gain from rising asset prices and reduced debt burdens, while ordinary citizens pay the hidden cost through the silent, persistent tax of inflation. For millions of people around the world, inflation isn't a theory, it's a daily struggle. In some countries, families rush to spend their paycheck the moment they receive it, because waiting even 1 week means everything will cost more. Savers watch their bank accounts lose value. Retirees see a lifetime of hard work evaporate. Middle-class families fall behind, even when they're doing everything right. Inflation is not just an economic issue, it's a human issue. It destroys stability, planning, hope, and financial security. And the tragic part? Most people don't realize inflation is a policy choice, not a natural disaster. Governments choose to inflate. Citizens are forced to pay for it. So why do governments keep using inflation even when it hurts ordinary people? Because inflation is the most politically convenient tax in the world. Here's what inflation does for governments. First, it lowers their debt. When prices rise, the real value of government debt falls, letting them pay back loans with cheaper money. Second, it boosts asset prices. This makes economies look strong on paper, even if the underlying fundamentals are weak. Third, it allows unlimited spending. Governments can fund massive projects and programs without having to raise direct taxes, which would make voters angry. And finally, it keeps the system running, even when the math no longer works. Governments don't have to say, "We're taking more of your paycheck." Inflation quietly takes it for them. And few people understand it well enough to protest. That's the real power of this hidden tax. Inflation isn't fair. It creates winners and losers, and that gap between them gets wider every single year. So, who's winning? Governments, big banks, and anyone with a lot of debt, like borrowers. Real estate owners, stock investors, And basically the wealthy who hold assets also come out ahead. And who loses? Savers, workers, pensioners, and low-income households. Anyone whose life depends on cash. Inflation is not a neutral force. It's a systematic redistribution of wealth, pulling it away from the many and concentrating it in the hands of a few. But here's the good news. While inflation is powerful, it is not unbeatable. History shows us that people who understand how it works can protect themselves and even do well. There are 3 key strategies that have stood the test of time. First, avoid keeping large amounts of cash saved for the long term. Money just sitting in a bank account is constantly losing its buying power. The number on your statement might stay the same, but what it can actually buy in the real world is shrinking every day. It's like a silent tax you never agreed to pay. Second, focus on real assets. These are things that tend to hold their value or even go up as money becomes worth less. Think about property, valuable skills, businesses, commodities, and smart investments. These are tangible, often income-producing resources that have historically beaten inflation, helping to preserve and grow wealth over time. Now, this is just a historical observation, not personalized financial advice. Third, study financial history. The biggest financial losses often happen to people who don't understand how money and policies like inflation really work. By learning from the past, you can spot risks, see opportunities, and make much better decisions. It doesn't matter if you're wealthy or just starting out. This one truth is universal. Knowledge is your most powerful asset. Understanding inflation gives you control and protects your financial future. It turns a hidden threat into a chance for smart planning. Inflation is not an accident. It's not some mysterious force we can't understand or a natural law of economics. It is a deliberate policy. It's a conscious decision made by governments and central banks to control money, manage debt, and steer the economy. It's a tool, and at its core, it's a hidden tax that quietly eats away at your wealth and your savings, all while those in power pretend everything is normal. For decades, regular people have been hit by this invisible tax, often without even realizing how it works. But now, you know the truth. You understand that inflation is engineered. You can see the patterns, understand the incentives, and know who benefits and who loses. With this knowledge, you can protect yourself. You can make informed decisions, preserve your wealth, invest wisely, and guard your future against the silent erosion of your money. Most importantly, you will never see money the same way again. Once you understand how inflation works, you gain the power to act instead of just watching your wealth slip away. Because the answers aren't hidden in the future. They're written in the past.